G'day and welcome to the Grow a Small Business Podcast. I'm your host, Troy Truen. Each week, we speak with an owner who has grown a business with 5 to 30 team members to something bigger. Diving into their numbers and unearthing the pain they've experienced, we explore what they did to overcome each barrier and what they would do differently from day one. Let's get into it.
We'll have all the show notes and any resources mentioned in the cast on our website. Age 19, started a financial planning firm with her father. In 2008, started her own private wealth management firm, sold that in 2015. 2012, inspired from advising millennials, she started a firm focusing on that niche, the first in Australia. Did $250,000 in the first year, then $1 million in each of the next 4 years before two pivots saw them reach $2 million annual recurring revenue. Then sold to her business partner and ex-husband in 2018. Co-founder of the League of Extraordinary Women, which has 200,000 members globally, from 5 FTE to 18 with all the non-financial planners offshore in the lower cost countries, bootstrapped every business except the current one, raised investment to grow it to a $1 billion company, closed the fundraise at 32% over, has sold 3 companies for over $2 million, felt she had succeeded when sold the first company and her personal wealth tipped over $1 million aged 32. Hardest thing about growing a small business is managing your own energy and building resilience. What Sarah would tell herself on day one of starting out is keep going. In episode 23, hear how Christopher quit a cushy telco job to fund a video tech business with little capital and now has 90 FTE and $15 million in annual sales, growing at 20 to 30% per annum. Welcome everyone. Today I'm interviewing Sarah Riegelhuth from Growmotely, and you're based, well, pretty much everywhere. You're currently in New Mexico on your way to Sedona in Arizona, and you have a base in Colorado as well as the beautiful Austin, Texas. So you do like to move around a bit. You've been away from Australia, you said 5 years now?
Sure do. I love to travel.
And how we know each other, Peter, our podcast editor, reached out and asked you to come on the show. Now, it sounds like you're quite the entrepreneur. You've got quite a history of businesses you've started and sold, and the one that you're focusing on at the moment is Growmotely. But perhaps let our audience know a bit about your business journey, and then we'll pick one of those businesses from the past and focus in on that.
Yeah, sure thing. So I started out my career working in financial planning with my dad in a family business. Had a bunch of other different jobs here and there, but that was really the focus of my career. And while I loved financial planning, I also really quickly fell in love with business and entrepreneurship, and ended up 10 years ago now, or a little more, I guess it was the very end of 2009, going out and starting my own financial planning business, which was a private wealth management firm called WE Private. And a couple of years after that, really felt inspired by advising people my own age, advising the millennial market in Australia, and so created Wealth Enhancers, which was Australia's first millennial-focused financial advisory firm.
Right.
That was a really incredible journey. And so along the way, we built WE Private up and sold that in 2015, then built Wealth Enhancers up, and I ended up selling out of that in 2018 to my ex-husband, who was my business partner, and also founded the League of Extraordinary Women, which some people might be familiar with. It's a pretty large 200,000 strong community. It's founded in Melbourne, but it's pretty global now for female entrepreneurs. With a couple of other, 3 other female founders. And yeah, I've had quite a few other businesses along the way. In 2014, I started Grow My Team, which is a remote recruitment company, because I wanted to turn all of my companies remote.
Yep.
And I needed someone to help me find staff. So ended up starting Grow My Team, which in January of last year, I stepped full-time in as the CEO, and then came up with the idea to launch the tech platform, which we're about to launch now. Completed a small capital raise earlier this year to build the platform, and we're just on our second capital raise right now as we're about to go live on the platform. So that's the very short, abbreviated version of my history.
Great. And Growmotely, before we pick one of the previous businesses, so have you got any numbers there to illustrate where that's at the moment?
Yeah, so we're not live yet. We just launched a campaign for pre-registrations for emails 3 weeks ago, and we just cracked over 2,000 today. So I think we're
Right.
at 2,068 or something right
Yep.
now.
Fantastic.
Yeah, so that's really the only growth to report at this point because we're
Yep.
not live, but it's been a really exciting journey, and seems Growmotely is a platform to connect remote professionals with companies all over the world into full-time permanent positions with benefits. And so, yeah, it's a very good timing, obviously, for what we're building with what's happening in the world right now. And our early go-to-market is showing a lot of promise and a lot of traction really quickly, which is great.
Yeah, fantastic. Well, it's going to be hard, but do you want to pick one business from the past and tell us how that started out, and we'll talk a bit about that?
Yeah, I think it's up to you. I'd either talk about Wealth Enhancers or the League of Extraordinary Women. Both are pretty interesting journeys, actually. Um, yeah. Which one sounds more interesting to you?
Well, what I'm thinking, would it be worth you talking about wealth enhancers, but if maybe could get one of the other three on to talk about the league, or is that something?
Yeah, absolutely. Yeah.
Yeah,
Yeah, let's talk about Wealth Enhancers.
yeah,
That was a really amazing journey, and it's very proud work for me. We were the first company in Australia to advise the millennial market and really talk with a lot of other advisors in the industry and encourage them to take a look at this as a viable target market. And I think it's really important. The earlier people can get financial advice, the better. So yeah, I'd love to talk you through that journey.
yeah, that's great. Yeah, I think one, it's such an important market. The millennials, the younger people, and secondly, wealth or building wealth and managing finances is such an under-resourced area, I think, across many parts of our lifetime. So it's great to see that people like yourself are in there getting people, millennials, more educated. So what year did you start?
Around 2012.
Yep.
And we launched it as, we started testing the model within the private client business that we had. Really, we started talking with all of these wealthy older retirees and pre-retirees and asking them, how did you get to this point? And they said, well, we got advice early. We've been chipping away at our investments and savings and our property portfolios for a long time. And this is where we ended up. And we were thinking at the time, I was probably 29-ish. My ex-husband was 26. And we were thinking, well, who's advising people like us? Who's advising our friends? We're kind of taking action for our finances, but this is our background. This is what we do. What about all of our friends? And so we launched the business with a few test clients just to see if people were interested. People had been asking us, what should I do with our money? Model and tried it out, and it was pretty popular. And I think we did, from memory, around $250,000 in revenue in the first year.
Yep.
It was a purely fee-based financial planning business, so monthly direct debit from your bank account. We didn't have any commissions or anything like that. And so we're like, well, that's a pretty decent first year of revenue, proves our concept. I can't remember the client number we got up to at that point, but we decided to pull it out of We Private and launch it as its own business with its own unique brand, and went from there.
Great. And when you started out, so was it just yourself and your ex-husband, or you had other staff in that business?
Well, I mean, we had a team in the private wealth management business. So we were sort of, they were kind of helping with the workload. And then when we decided to pull it out as our own business, we had a little team there. We had, I think, 2 financial advisors and some paraplanners and client services managers. And we had enough revenue to support a small team and to build the business from there.
Yeah, great. And what did you grow it to team-wise? And if you can share the top line by the time you sold in 2018?
Yeah, we grew. So the following year after the first year, I remember we did around $1 million in annual recurring revenue, and kind of got stuck at that point for 4 years, which was really interesting. So we kind of had this really early validation and early growth, going from 250 the first year, which in a service business starting out is is reasonable validation that you've got something, I think. And then jumping to the mil mark the following year, and we were like, this is great. And then all of a sudden we just couldn't quite crack the code to grow. And really what that came down to was the retention rate of customers in that type of business was different to my previous experience in financial advice. Firstly, when we were in a commission-based model, people didn't really question their financial advice. They just stuck around because they'd been recommended some products and the fees were getting paid to the advisor from the product. So the client didn't even really necessarily see it, even though it was disclosed to them. I think it was just an easier decision for them to stay. And also, you know, we were a higher end firm. We were charging at minimum $6,000 a year, at most 15, depending on the complexity of the client. So it was a significant investment for people, which means it became a decision every year if they wanted to stay. And what we had found, that we'd just gotten into this kind of cycle where for every new member we would bring on, you know, somebody else would have had their year or two with us and they'd be ready to kind of go and do it on their own. So there was, you know, some challenges we needed to work on there around our retention rate and how could we engage people for longer. Because we also knew that while you think you can do it on your own after a year of having financial advice, the reality is, you know, the role of a financial advisor is often to keep you on course and stop you from doing crazy, wild, silly things, more so than anything else. So we knew that we were letting people down by kind of letting them walk out the door, but we had things we needed to improve in order to show our value and all of those kinds of things. And we needed to crack the code on bringing enough leads in. And that was something that we'd really worked hard at. And we, as I say, we were about 4 or 5 years in, doing a lot of brand building activity and a lot of attempts at lead generation. And in that year, that 4th year, I went through 3 marketing agencies, and the 4th agency, I'd give them each 3 months. And if we couldn't get the results we needed, we were looking to sort of generate between 75 and 100 inbound leads a month. If we couldn't get the results we needed, I had to terminate a relationship because it was expensive also to do all of this outbound marketing activity. And eventually our 4th agency really started getting some great results. And we started generating that 75 to 100 leads a month, which meant I could bring on more financial advisors. I also had a brainwave when I was in Silicon Valley, and I don't think I was living over there at the time, or maybe I was, I can't remember. I got a message from a friend of mine who was a financial advisor but was now living in Bali, and she said to me, "What do you think, babe? Should I maintain my CFP certification or not? I worked so hard to get it, but there is no way in hell I want to go back and work in a grey office in fucking Collins Street again." And I was like, damn, you know, I get it. Like I'd been remote for 2-3 years at that point. My whole team was remote. And all of a sudden I realized, well, what would be stopping her from working for us from Bali or wherever she was in the world? We are already remote. I understood that, you know, financial advisors, I had this inkling that the millennial financial advisor was also looking for more freedom, more flexibility, a more entrepreneurial environment to work in, more control over their own earning ability. And I did a really quick survey overnight and got about 40 responses from the financial advice industry in Australia, asking them, testing this hypothesis that I had, that if rather than paying them a salary, I paid them a fee share arrangement. So we split the fees, but gave them full flexibility to work wherever they wanted, whenever they wanted, and to take on as many or as little clients as they wanted, and be fully supported with all of the back end services and marketing and everything. And overwhelmingly, the response was like, yeah, we would love to do that. So instantly, I pretty much was validated on my idea. We had the leads coming in. Finally, I converted my existing team to a fee share arrangement, which basically worked out very similar to what their salaries were when we converted it. And we I think we had 2 advisors at the time, and we grew to 6 over the next 12 months. And our revenue in the 6 months following that went up to 57%.
Wow.
Went up by 57%,
Yep.
sorry. So we saw this immediate uptick, and I knew that finally after 4 years I'd cracked that code. And I share that story because I think we often do get stuck in our businesses in these points where it's like, what's the lever? Like, our growth isn't always linear. Like, we can plan to grow 20% a year or 10% a year or 80% or whatever you want to do. And that's really wonderful. But, you know, the first year we grew, what was it, like 200% or 300% or something, 400%. And then the next year we grew basically nothing. And that's what can happen sometimes. And what I learned as a CEO during that 4-year period was I essentially had 5 levers, and it was, how many leads are we getting in? What's the sales conversion rate? What's our member retention rate? What were the other 2
lifetime
that I would look at? Lifetime value of a customer. Yes, what was it costing us? And customer acquisition cost. Yeah.
That's very much SaaS metrics. I mean, a lot of SaaS companies these days, they're the 5 levers they really focus on.
Yeah, so I would look at those levers, and then I would know. And once we sort of cracked that inbound lead code, and I figured out a better remuneration structure for advisors, which freed us up to be able to grow, because one of the hindrances of a service-based business is, you know, particularly in financial services or other professional services, the upfront salary that somebody wants to take when they don't yet have any clients is very high. You could be investing up to $10,000, $20,000 a month on a new hire. And how long is it going to take them to actually get to a point where they're bringing in the 4, 5, 6 times revenue they need to be managing in order, you know, to justify that salary? And how many of them are not going to work out in the meantime, in which case the entire salary has been wasted? So moving to that fee share model, which I will also say we really could only do once we had a brand, a very strong purpose, vision, very strong culture, and leads and systems and process to be able to support that. It was not a model that would work if you want people to come in and just like give it a go and you don't have the support for them. You know, it took us 5 years as a business to get to that place. And then I ended up selling out of my share of the company about a year later. And I think we'd hit around somewhere between 1.8 and 2 mil in annual recurring revenue at that time. So
that's awesome. Well done. That is great.
Thank you.
You finally cracked the nut, found the formula, found the real pinch points that were holding you back. Pretty much doubled sales in a year. Yeah. And what would the FTE have been then when you exited, like full-time equivalent across the team? You said.
Well, I mean, we moved to a global employment model, or like a global staffing model as well, which allowed us to have many more resources than we would have had if we were employing locally. So I think we had about 18 staff, which there's no way you could afford 18 financial services staff on full-time salaries in Australia based on the rates. But moving to a model where we had only the financial advisors were Australian, and every other person in the business was located internationally in areas where the salaries were more reasonable. We were able to build really good quality support and like a marketing team and a finance team and an operations team, which a business of that size, you know, it's hard to have that type of team. So it was, you know, I felt I was loving my role there and felt we were very well positioned to grow from that point, especially that acceleration we'd seen over the last year, and ended up selling out of it because my ex-husband and I had been trying to work together for around 2 years, and we're at the point where we were like, this is getting really difficult. One of us needs to buy the other one out. And so that's what ended up happening there. But had that not happened, you know, I felt in a really great position. That business was in a really great position to scale and grow from there.
Yeah, great. Well done. That sounds like an amazing journey. When was the moment you felt like you'd succeeded in your business journey to date?
Selling my first company was a big, you know, really big deal. When you get that, I've sold 3 companies for over $2 million, and that first one where my personal financial position went over $1 million. It's just an arbitrary number, but it felt really nice.
Yes.
I think, you know, I'd been chipping away at my personal wealth up until that time, and maybe I was at around $500,000 or something, and across my different investments, and that had grown very steadily from a 19-year-old to I was probably about 32 when I made that first exit, and to just see that jump. And it also validated that I'd built something that was able to be sold. It was worth something, that another business could buy it and continue to run it. It was freeing because I was burnt out and tired of that particular company at that time. But I think that having that exit was very, very validating as an entrepreneur, that all of the hard work and everything I did it for had sort of culminated to something in the end.
Yep. And what does success look like to you?
Not setting an alarm in the morning, being able to be wherever I am, whenever I want to be.
Yeah.
Freedom's my highest value. So not being tethered to anything, and being able to have freedom and flexibility and spontaneity in my days and my life, and be and do whatever I feel on those days, and working on something that I'm obsessed with.
Yep.
And that's how all of my businesses, how they've all started and how they all are, is that I can't not do them. It's not a question. It's just like I'm obsessed.
Yep. Right. Number one thing you'd recommend to marketing a fast-growing business?
I think it really depends on the business. My experience versus a recommendation has been building my personal brand has really been an effective way to leverage, sort of cross-leverage the business with my own personal brand. That's really always helped me and done me well. But I mean, it's a big question to answer because there's digital marketing, there's events, there's all sorts of things. I think knowing who you are as a business and what your culture is. I mean, we did some wild things with Wealth Enhancers. We used to throw these huge parties in our office when we did have an office in South Melbourne. It backed onto a laneway, and we turfed the garage, would throw open the garage door, get a DJ, kegs, beer pong, and we would throw these wild parties because our target market was millennials.
Yep.
And we didn't talk anything about finance. We didn't have any presentations or anything like that. We would just have a good time, and we would get 200 people through the door in an evening, $5 on entry, going to the charity that we worked with, and everyone would get a red cup, and you would go and drink beer from a keg and just have a great night, you know. And we were all in our late 20s, early 30s, and that worked incredibly well for us to build community around what we were doing and make a name for ourselves. So community, I would say building my personal brand and building community around my business have been two of the things that have been really successful for me.
Yep. Great. What about funding your business? I guess all your businesses with the first one, was it just your own capital, or you've had investors?
I've only just raised capital for the first time now. So I've bootstrapped everything.
Yep.
Once again, like pros and cons, bootstrapping really teaches you to be scrappy and to make magic out of dust, which is a really powerful tool in your toolkit as an entrepreneur. I'm now trying to build, or I am now building, a $1 billion company, and being scrappy won't necessarily work when I'm trying to grow that into a market that's this big and this quickly. So, you know, there's some changing my thinking now and being willing to invest bigger amounts of money up front to get bigger outcomes quickly. But my scrappiness still pays off because it's also, we don't want to waste money, you know. And I think there's a lot of ways you can waste money in business on things you don't need. And when you have a limited budget and limited resource, and you have to really think about everything you're spending, like you don't need to go and spend all of this money on, like, I don't know, a branding strategy or legal documents up front. You don't even know if your business is going to work at that point. You also don't even know what it's going to become, because every business I've started, you know, as you go to market and you learn what your market actually wants.
You change.
It changes. It doesn't end up being exactly what you thought it would be. So up front, like being mindful of that and leaving some space, because you can always spend that money on a branding strategy in 6 months even. It doesn't have to be 5 years. Like, it could be soon, but don't think that you need to do all of these really expensive things, even with contracts and things. And that's contrarian. Like, people, there'll be different advice on that. But once again, like, what are you building contracts for in the beginning? Like, what are you trying to make so watertight when you don't even know if you have product market fit yet, or if people are even going to buy what you're doing? Or so I think there's an element of getting things done, but being sensible about how you're spending money on it, because there's plenty of people that will charge you a lot of money to do things.
Yes. And if you were to start up today with plenty of funding, would you go into your industry? I guess the best one to talk to there is the financial advice industry.
No,
you wouldn't.
I wouldn't go into that industry. That's why I'm not in it anymore. I don't do things I don't want to do.
Yeah.
But no, I mean, if I'm a startup today with plenty of funding, would I go into the industry? I mean, I am a startup today with funding in an emerging industry, which is remote work, and I'm absolutely bang on and excited about it. Would I go into financial services again? No. There's part of the answer is I'm tired. I got tired of financial services. I did 17 years, and it was great, and I got tired. So that's me. But two, it is a very regulated industry now.
Yeah.
And over my career, I spent more time in the end on compliance and regulation than I did doing what I was passionate about, which was changing people's lives and helping people and coaching them. So that's kind of my reason for that answer. But that's not to say there's not a ton of opportunity there.
I think you've really hit on a winner with focusing on the remote working space. I think that is, especially after COVID, it was already trending that way. But COVID's just accelerated that. Yeah, it's
really exciting. We closed our seed round 32% oversubscribed the Friday before we went into lockdown in the US. So the timing couldn't have been better.
Right. Yeah. Well, maybe a week or two later, the valuation might have been a bit higher, seeing everyone going remote.
Maybe. Yeah. It was pretty great.
Can you outline the most stressful point in your small business growth journey so our audience can learn from it?
Oh, there's been so many. I would say there was a time with Wealth Enhancers where we were losing $100,000 a month, and we were already somewhere between 300 and 500 in. Like, that's what the company owed me personally. And I looked at it and realized we'd be out of business within 6 months if I didn't do something. And that was really stressful. And I guess in a way I had money to put in, but I could see that I was just putting good money after bad at that point. And I had to own that I had got us to that place. I had mismanaged things a little bit to that point, and I had to like really sit with my team and tell them, like, this is what's up and this is where we're at, and we need to make some changes, because right now we don't have our strategy right. And so, we went too aggressive on growth after that first, it was year 3 when we'd had the 250 to the millish, like, oh, this is amazing. You just started throwing money at it and didn't get the growth. And at the end of that year, it was like, whoa. So that was really stressful. Yeah. And then we did have a startup in 2016 called We Love Numbers. That was an online, it was when Xero really came into the market. And we'd really become familiar with building international teams. And we built basically an online bookkeeping and accounting business that was a newish model at the time, where we were charging fixed flat fee monthly bookkeeping. And we had really good early success, grew to about 50 clients in the first 6 months or something, and raised a round of capital. We raised $750,000. And but we didn't have our strategy right. We'd already burnt about $500,000 of our own money and were nowhere near right. We had a lot of discontent in our customer base, a lot of discontent in our team. And my ex-husband was approaching serious burnout. And he came home from a trip from LA one day, and it was the same day that our last investor dollar had landed in the bank account. And it was one of those just come to Jesus moments where I looked at everything on the table. I could see where he was at. And I was like, we can't do this. I'm not willing to spend other people's money trying to figure this out. I think we're too far away from having it figured out. But in all honesty as well, I look back now and I'm like, I was scared. I didn't have the balls in that moment. I didn't have the bandwidth as well, because I could see that he was approaching burnout, and we still had other businesses, and we'd stretched ourselves way too thin. And so we made a call to give every dollar back to our investors, to call them all up and say, look, we've decided we're not going to go ahead with it. We don't think we have the strategy right, and we don't want to waste your money. And we did have to put 100,000. We'd already spent about 100 of the 750. So we put our own money in so that we literally returned every exact dollar to our investors. So it was a really difficult decision to make.
And then you shut that business down?
Yeah, we sold what we had to some other accounting firms, but definitely didn't recover what we'd lost. Huge learning curve, and that was a business that was started after 3 exits, and we were cocky and overconfident. And
it's one of the sayings I love. That success is a poor teacher.
Yeah. Yes, and that lesson was brilliant, because it reminded me that, because that was where all those years of being scrappy and, making magic and doing all of that, all of a sudden we'd had all this success, and we're like, imagine if we did it with funding. Imagine if we did it, imagine if we hired the A team right off the bat.
Yeah.
And we did it all. We hired the A team, we had all the funding, we did everything, and it was a mess, and it was super stressful, and we were burnt out. We just hadn't taken time out. That we'd both sort of talked about taking time out after our first exit and our second, and we just never did it. We just kept going, and we were tired and we were burnt out. And I think ultimately the question came down to, I believe, and I've, I lost another business during COVID, which I can talk to in a minute as well, but I believe every time you decide to close a business, more or less, it's a decision. I'm not a victim to the circumstance. It's like a decision. And the decision in that case was, we don't have the energy right now to really do what it takes.
Yep.
And I had an Airbnb property management company that I just bought in June last year.
Oh no.
That mainly had its properties in Melbourne and was pretty smashed by the bushfires initially, about 25% loss in revenue, and then COVID happened, and it just went from 150,000 a month in revenue or whatever it was to about 6 by the end. And so that was sort of in a 12-month period. So we made the decision to put that business into liquidation, because it just was really not viable. But the main thing with that one as well was the CEO. I was just an investor in that one. The CEO was totally burnt out by the experience. And that's a really big thing for us as entrepreneurs to consider, is our energy levels. If we get to that point where we're so burnt out that we're not sleeping, we're so stressed, we're not enjoying it anymore,
is it worth it?
That energy is not attracting abundance and growth and vibration, high vibration and alignment and all of that. And ultimately, that's what it comes down to sometimes.
Yep. Yeah. And what area in business do you feel you've had to work on the most to add the greatest value?
Leadership.
Yep.
I would say who I am as a person, and it has added the most value. All the inner work that I do on myself as a human greatly impacts my business in really positive ways. And I think, I can confidently say what I'm good at now is building really aligned teams that are really engaged. And that ultimately leads to better performance. When people are engaged in what they do and they're happy and they love it and they love working together, you get better results as a company. And that's all come about as I've done more and more work understanding where my ego is showing up, questioning that, and being vulnerable and open and transparent with my team about where I'm at. That's been the most transformative thing for me.
Yeah, great. And what have you enjoyed least about managing fast growth?
I think I think honestly, I kind of love it because I love the challenge, but fast growth comes with fast challenge. Like, you're constantly hitting growth edges as a person. as a team, as your systems, your process, like everything is constantly being breaking essentially. And like that can be you, that can be your spirit is breaking, that can be your cash is breaking. Like growth doesn't always mean revenue or profit. Growth sometimes, if you don't have that quite right, your growth can actually stuff you up a little bit. It also can lead to poor retention because maybe your service starts suffering. Like there's so many different elements that you're constantly being faced with. So I think the most challenging part of it is building enough resilience and ability to deal with that pace of being stretched and being pushed out of your comfort zone. And I love it, really. I mean, I thrive on it, and sometimes it gets overwhelming. It gets a little bit difficult. But yeah, I love the problem solving element of it. And I think, honestly, when I come back to that personal growth thing, like there is a lot of work when you're in a fast growth situation. There's a lot of work of getting out of your own way. The block, anytime you hit it, is usually within you.
Yep. And what do you love most about growing a small business?
Building a team and delivering something to the world that I'm obsessed about.
And what's been the biggest mindset shift?
That, it's all a game. And if you can look at it as a game and have fun with it and not be as attached to it in a really positive way. Like I love the game. I love what I'm doing. I love what I'm bringing to the world, but it is not everything, you know, we're not our businesses. It's something we're engaged in. Life is a game. Everything is a game.
That's a really good philosophy or way to look at it. What about the number one habit you think a small business owner needs to develop and maintain?
I would say doing your own work on yourself as a person, consistently looking at who you are and how you're contributing positively or negatively to the situation. Whenever you think that it's happening outside of you, whether it's the market, whether it's this team member or that team member, whether it's this customer or that, you're giving your power away. And whenever you can stay with yourself and say, well, I accept this customer into my business. I accept this team member into my business. I have choices. I have control. I have power. When I say control and power, I think we live in uncertainty and all of that as well. And by power, I mean that personal power and feeling empowered to change. I think developing a habit of doing your inner work and bringing that to your company and your team is critical.
I agree. Totally agree with that.
Be the change you want to see in your business. Become more productive and less stressed with our free Transform Your Performance online course. Once you see the benefits, put your entire team through the course at no cost. We start out by telling you the secret to guaranteed success, then over 100 lessons help you be more focused, present, productive, and feel more in control about work. growasmallbusiness.com.
And can you talk to how you added people to the team, some wins, mistakes, and advice for those listening?
Adding people to the team. So like just growing your team, you mean?
Yeah, so it's mainly around recruitment is, I guess, what we're talking about there,
Yeah, so alignment is the number one thing for me. So I'm looking for alignment in terms of how we like to work. Alignment in terms of what we're building. Like, do we both care about the same thing? And are we like similar enough sort of people? And by that, I don't mean the skills and stuff. Obviously, we're all a little bit different in our skills, but if we think about our values, I think of that. Our values are what is our culture. Our values are like who we are when we show up. So flexibility is really important to me, as I mentioned earlier in our conversation, flexibility and freedom. And I give that to my team as well. And I look for people who thrive with that flexibility and that freedom. Transparency, really big one for me. I'm very transparent with my team. I'll cry on my team meetings if that's what's going on for me. They know what's going on in my personal life. Like, they know, we go through all of the numbers every single week in our business. It's full open book, everything.
Right. Yeah.
You know, that's important to me. Like, I'm not saying any of these things, by the way, are right or wrong, but what I do think is really important when building a team is that you're finding people that like to work in the same way, the same type of environment as you, and who care as much as you do. And when you do that, it's just incredible.
Yeah.
And I will share that having it means you can have these kind of more open conversations around when things are not going well. What I've always discovered is it comes down to alignment. They're either not as passionate about what you're working on as you are, or they don't particularly like working in the same way that you do, or something like that. And rather than trying to performance manage people, I've discovered that if people are engaged in what we're doing and they love it, they show up. You don't need to performance manage them.
How big is the chasm between an A and a B player, and particularly when you overlay that with someone that's aligned with your purpose and vision?
Yeah, I mean, if you'd asked me that question 5 years ago, I would have said an A player is 4 times more productive than a B player. And I would have answered it blankly like that, thinking that it was all about them. And I still believe that's true, but what is an A player and what is a B player? And an A player is someone who is very engaged and aligned with what you're doing. It's not actually about them specifically and their like skill sets and abilities. I think it's about how much they care about what you're building. And this is huge for millennials. Like that is pretty well the most important thing for millennials, is that what they show up to do every day, that they feel valued, they feel respected, that they feel like they're contributing to something they care about.
Yeah, absolutely. Yeah. Well, I think that's been there for some time. A lot of HR studies show that pay is like the 5th reason someone works somewhere. And it's all those things you just described are, above pay, because it's just so important to love working, or the kind of work that you do, and working where you do work.
Yeah.
It's such a big part of our time. It's a quarter of our week generally.
Yeah.
What are some things you'd recommend in building sustainable and kick-ass culture to help with the growth?
Being honest with yourself about what your culture is. Culture it exists. It's not something you create specifically. I think you have to be intentional about it. But to use an example of, an office, but like putting a ping pong table in your office isn't culture, and doesn't create a good culture. Like, as I say, culture for us is flexibility and scalability, trust through transparency, think and act global. These are all our values. This is our culture.
Yep.
Own it and grow from it is one of the other ones. So those things, they are true for us. They're not aspirational. We don't say we'd like to be flexible, but we're not actually flexible. I think it's really important, and there's nothing wrong with being the opposite of flexible. There's nothing wrong with being rigid and structured, but knowing that and being able to communicate that that's how you are and who you are as an organization means you'll find people that want to work in that type of organization. Just as I said, like transparency and all that, that's very important for me as a founder and for the culture that we've built, and for my team members. Some people don't want that. They like to keep personal life and professional life separate, and like to kind of come in, and work is almost an escape for them. So if that's who you are as a founder and that's how your culture is, like, communicate that. Don't pretend we're really transparent. Be whatever you are, which might be like focused and diligent, or results driven, results above anything else, whatever. Like, it's okay to be whatever you are. The biggest favor you can do for yourself as a leader and a founder when it comes to your culture is to be honest with yourself about what it is and start communicating that. And not be aspirational about it, because usually we fall down if we're aspirational.
Yes. Yeah, great advice. Tell our audience how you've handled balance.
I think balance is like an interesting one. It kind of conjures up images and ideas of this like perfect schedule and like this and that. And I think I look at balance as more like over my whole life. And there are times like right now where I'm completely enraptured and enthralled with what I'm building. And there are other times where we're in more of we've kind of brought this to life. We're going, things are growing, things are good. We're in like a steady mode. And then other things in my life might take more priority. That being said, I switch off regularly with my phone. So I take retreat several times a year. It's probably up to like 4 to 6 times a year now, where I take up to a week where I'm completely offline. And once again, I wouldn't call it balance, but what that does is it recenters me, it grounds me.
You must be quite re-energized from that as well, from that time.
Totally.
A lot less, short, sharp communication, notifications, etc., and just get to focus on, you again.
Yeah. It reminds me like that it isn't real, that it's just a game we're playing, and that if it's not enjoyable, we don't have to be doing it. It allows actually downloads to come. It allows me to almost channel like from the universe, like what I'm going to create, rather than being like so in it all the time. And that can go for my life as well, not just my business, but anything in my life. We can start to be so in it that we're not seeing things and we're taking things for granted, and we're in our stories, switching off and disconnecting. I work with plant medicine a lot. So often those retreats will either be silent meditation, or they'll be plant medicine or something like that. Or I might just go on like a multi-day hike in nature. But being disconnected from, the everydayness of our world, and in this different kind of space where I have time to be away from the technology and the everydayness, is so grounding for me.
Yep. And how much professional development did you invest in yourself over the years? Sounds like it's a big focus. A shit ton.
Yes. Yeah. I mean, I've been a member of EO for 7 years. I'm a member of Fit for Service here in the US. I read books on professional and personal development. I don't even know what's the difference. I've done an EMP, Entrepreneurial Masters program at MIT. It's a huge, growth is such a huge part of who I am and my life. So I spend a lot of money and time on all of it, and I'll carve out time. Like I was facing a cash flow issue in my business last week, and so I blocked out Friday and I sat with myself to dive into my own relationship with money, and how is my relationship with money showing up in my business, because everything in our business is coming from us somehow. I did journaling and meditation and vision boarding and all sorts of things, and so I have a lot of tools in my toolkit now to be able to kind of dive in when I need to as well.
Yep. Just back on EO, Anna Ross was on the cast recently. She's from Kester Black, which is a vegan nail polish and lipstick company. She mentioned she joined EO around the time she won the Telstra Businesswoman of the Year award. What is EO?
Entrepreneurs Organization is the full title. And it's a global organization for entrepreneurs with businesses with a turnover of $1 million US or more per year.
Yep.
And we create forums, and there's a lot of events and learning and development.
Yeah, good to know, because I forgot to ask her what that acronym was. Have you had any mentors or coaches along the way?
Yeah, many, but kind of informal and fluid. It's, just the different people that I've met through EO and other organizations, actually, my peers. I think it's important to sort of surround yourself with, but do it in the style that works for you.
Yeah.
I mean, I move pretty quickly in my world, in my growth, in everything. So I don't have like one person who's been there for 10 years supporting me or something. It's been really a big mix of getting that.
And what about a board of directors or advisors in any of your businesses?
Had that early on in WE Private, and I do have a board of advisors in Growmotely as well now. I'm really moving into a new space in technology and also in the size of business that I'm creating. So I think it adds value along the way. I personally had a very formal structure early on that I found probably I was spending more time and not getting so much value. So the structure I'm doing now is these are a handful of people that I really respect that bring value for different reasons, and can I call on you if I need to pick your brain? And that's essentially how it's working, and that's working well for me for right now.
Yeah, that's good. I'm a big believer in more agile boards, whether formal boards or advisors, rather than too much corporate governance and 15-page minutes, which I've had before. I've stepped onto a board and I quickly got that down to 1 or 2 page minutes. But yeah, you really got to focus on where the value is.
Yeah.
All right, Sarah, on to our final 5 questions. What do you think is the hardest thing in growing a small business?
Just managing your own energy. I think managing that roller coaster, it's really not easy, and it takes time to build the resilience and understand that you'll live on to fight another day if you just keep going.
Yeah, yep. And favourite business book, which has helped you the most?
Oh, couldn't even answer it. I've read so many. Yeah. Sorry.
That's all right.
I'm so bad at remembering like resources like that. You know what I love though is like podcasts like How I Built This and stuff.
That's the next question. Any great podcast for online learning tools? Yeah.
Well, How I Built This is dope. Like, and there are other ones like Stanford. I used to listen to the Stanford series. But How I Built This is one I've been listening to recently and did also many years ago. And I think how amazing it is that I can go for an hour walk in the morning and listen to one of the most amazing founders in the world every single day of the week if I want to.
Yep.
Pretty cool.
Absolutely, yeah. And one tool you'd recommend to help grow a small business?
I love Basecamp for communication and workflow management and streamlining everything. It's amazing. I've run many different types of businesses on Basecamp and always seems to be able to work and help us.
I haven't used their products, but I have been a big fan of what used to be called 37 Signals. They're now called Basecamp. Mm-hmm. They've got a few products, but they've had at their center from day one pretty much is that remote working. Because I think one of the founders was in Chicago, the other one was in Copenhagen, and most of their team obviously is very, very remote.
They're a super cool company and have a super cool product.
Yeah, I've read a couple of their books, Rework and Remote, which obviously talks very much about how they've managed their culture and the growth of their business. Final and my favorite question, what would you tell yourself on day one of starting out?
I would tell myself what my dad told me when my first staff member quit. This problem that you think you're facing or that you're going to face, you're going to face over and over and over again, many different versions, many different variations, and just get used to it and just keep going.
Yeah, that's great advice. Yeah.
And maybe challenges is a better word than problems. I probably prefer that word, but yeah, it's a series. Being in business is a series of challenges and an exercise in continual problem solving.
Yep. Well, just before we sign off, do you want to quickly mention the League of Extraordinary Women? Because I think it'd be great to have someone on the cast, one of the other founders. Tell us, the audience, a little bit about that, what it does, and who might be.
Yeah, I could definitely recommend chatting with Cheryl Tai, who's one of my co-founders and the current CEO of the League. And it's an organization we started in 2011. I actually just did a podcast with her on my show, Conscious Culture, where we talked a little bit about the history of it and everything. But she's amazing. And we launched it because we wanted to hear from more women and bring more women together. And we thought we would have one event and we thought we would sell 30 tickets, but we sold 160 in 3 weeks. And our Facebook page blew up to thousands of people in a couple of weeks. And we were like, what did we just accidentally burr? And over the next, it's been 9 years now. We've held over 800 events worldwide. I think we are the largest female entrepreneur conference in Australia, around the world. It's really an amazing day. Obviously, we haven't been running it this year, but in previous years. And we've drastically impacted the landscape for the positive of female entrepreneurship in Australia and beyond. We've seen much more higher participation of females in the ecosystem, in the entrepreneurial ecosystem. So it's been just such a great journey.
Well done. That's a terrific cause to beginning.
Yeah, it's very proud work. And I mean, the easiest way to connect is just check us out on Instagram at the League Women. But you know, we have a website and all the other stuff as well. But we're doing a lot of IG lives right now with just really cool women founders from all over the world.
Great.
Diversity is a really important part of our company. Like, we are a diverse founder group in terms of ethnicity and all of that. And it's just been something important to us that we're really embracing right now with everything that's the spotlight that's gone onto that lately as well. So knowing that we were able to play such a role in the gender issues that we were facing back then and still are, and now bringing diversity into it as well and putting a bit more of a spotlight on that, it's really cool.
Yeah, great. And I'd love to speak more about that. How many members did you say you've got at the moment?
Our community is around 200,000 strong across all of our different platforms and email lists and all of that. Yeah.
Well done.
Thank you.
Well, thanks very much for your time today, Sarah. I think the audience got a lot of value out of what you shared with us today. A very fast growing with some stress thrown in there, but many businesses. And I wish you all the best with Growmotely, the next chapter of your business journey, and we might have you back on the cast in a year or so to hear how it's gone.
Thank you so much. Yeah, watch this space. It's like a rocket ship over here.
And for our audience, we would greatly appreciate a review in iTunes or whatever platform you listen to us on. More reviews means we bubble up higher in iTunes, etc. So more business owners looking for podcast help with their growth will find us.